Well, good morning, ladies and gentlemen. My name is Russell Higgins and I'm the Chairman of Argo Investments Limited. And on behalf of the Board of Directors, I'm pleased to welcome you to the 77th Annual General Meeting of the company and to report on its operations and financial results for the year ended 30 June 2023. It's a warm welcome to everybody here and to all those viewing on the webcast, no matter where you may be in Australia or around the world. It's pleasing to be able to meet in person in Adelaide once again, and I see many of our shareholders are here and a number of visitors, so good morning and welcome. Before we begin the formalities today, I'd like to inform you that the meeting is being filmed and streamed live on the internet at the company's website for all those shareholders who are unable to attend. A recording of the meeting will be available via our website later in the day. Can I please ask that your mobile phones are turned to silent, and let me do mine. It would have been good, wouldn't it? All right, thank you. I've been informed by the Company Secretary that the meeting has been convened in accordance with the Corporations Act and the company's constitution. A quorum is present and therefore I declare the meeting open. A disclaimer is displayed before you on the screen, and it's important to understand that the information presented today is general information only, and it's not a securities recommendation or statement of opinion intended to influence any person making an investment decision. You should consider seeking professional advice before making any significant investment decision. I'm pleased to ask all my fellow non-executive directors, our Managing Director and our Company Secretary to introduce themselves to you this morning.
Good morning. My name is Leanne Buck. I'm the Chair of the Audit and Risk Committee and I was appointed to the board in 2022.
Hi, my name's Chris Cuff. I was appointed to the board in 2016 and I'm also a member of the Audit and Risk Committee.
Good morning. My name's Melissa Holzberger. I was appointed to the board on the 1st of October this year. I'm a member of the Remuneration Committee. I'm up for election today, so you'll hear from me further later.
Good morning. My name is Liz Lewin. I was appointed to the board in 2018 and I'm a member of the Remuneration Committee.
Good morning. My name is Peter Warren. I joined the board in November 2022 and I've recently been appointed to be Chair of the Remuneration Committee. I'm also standing for election today, so you'll also hear from me a bit later. Thank you.
Good morning, everyone. My name's Jason Beddoe. I'm the Managing Director of Argo Investments and coming into my 23rd year with the company, so welcome.
My name's Tim Banks. I'm not a director. I'm the Company Secretary. I've been with Argo a while too. 2007 I started. I'm also the Chief Operating Officer.
Well, thank you. I'll now move on to the meeting procedures. All resolutions at this AGM will be decided by poll. As Chairman, I have called that poll. When registering your attendance, you would have received either a green, pink or white admission card. Shareholders or proxy holders representing shareholders were issued with green admission cards and are entitled to vote on the poll and also to ask questions at the meeting. On the reverse side of your green admission card is a voting paper and instructions. Only those shareholders with a green card have received a voting paper. This can be marked at any time and certainly at the time that we consider each resolution. Or after the meeting, you can please place your completed voting cards in one of the ballot boxes located by the exit doors. The results of the poll will be released by announcement to the ASX later in the day. The holders of pink cards are non-voting shareholders, such as a joint shareholder when the other joint shareholder holds the green voting card. These pink card holders do not vote on the poll but are entitled to ask questions at the meeting. And all visitors were issued with white cards and are not entitled to vote nor ask questions at the meeting, but nevertheless you are extremely welcome. I report that the minutes of last year's annual general meeting were confirmed as a correct record at the subsequent meeting of the Board of Directors. The notice of meeting for today has been circulated to shareholders and I propose to take it as read. We will now move to the first item of business. That concerns the annual financial statements and reports. The audited financial statements of the company and reports of the directors and the auditor for the year ended 30 June 2023 have been published and made available to shareholders. In the course of receiving and considering the financial reports, I will now make some general comments about the year under review. This will be followed by an address from our Managing Director, Jason Beddow. Last financial year was characterised by market volatility and challenging macroeconomic conditions. The global economy was impacted as governments and central banks unwound the emergency fiscal and monetary policies adopted during the global pandemic, and as supply chains began to recover from the severe disruptions. Inflation re-emerged as a challenge for world economies and for policymakers. In this environment, Argo Investments again delivered a positive total return for shareholders, including record high, fully franked annual dividends. Argo's 2023 full-year profit of $271.7 million represents an increase of 8.2% over the previous year, excluding one-off non-cash income received during the prior reporting period. A number of companies in Argo's portfolio increased their dividends, which bolstered our income. However, these higher dividends were partially offset by lower dividends received from BHP and Rio Tinto Limited, reflecting weaker commodity prices, particularly for iron ore. In August, the board was pleased to declare fully franked final dividend of 18 cents per share. Together with Argo's interim dividend of 16.5 cents per share, annual fully franked dividends totaled 34.5 cents per share, an increase of 4.5%. Significantly, both the interim and final fully franked dividends for the 2023 financial year marked record highs for the company. We have now paid dividends every year since Argo was founded in 1946, and it's worth noting that only a handful of Australian listed companies can boast a record of delivering dividends to shareholders for 77 consecutive years. Furthermore, since the introduction of Australia's imputation system in 1987, every dividend has franking credits attached, and since 1995, all dividends have been fully franked. We are proud of this enviable track record and remain focused on providing our shareholders with sustainable and tax-effective fully franked dividends, together with capital growth. Over the 12 months to 30 September 2023, Argo's investment performance as measured by net tangible assets or NTA return after management expenses and adjusted for the corporate tax we pay, that increase was 13.1%. This compares with the S&P ASX 200 accumulation index, which gained 13.5%, just slightly ahead, but noting that this index makes no allowance for any costs. This slight underperformance relative to the index reflects investor sentiment pivoting back to growth-style investments. Argo's investment process favours more mature businesses that can maintain and grow their dividends. Taking a longer-term view, over the 3 financial years since the COVID pandemic, Argo has outperformed the index of 11.0% per annum, with Argo delivering 11.8% per annum. I'll now turn to director matters. I informed shareholders at last year's AGM that the board had developed a succession plan to refresh the board while maintaining an appropriate mix of skills, experience and diversity. Retirements and new appointments are being staggered over time to ensure our long-serving non-executive directors are not all retiring simultaneously. The first elements of the succession plan were implemented in the period leading up to last year's AGM, and you'll recall that Anne Brennan retired at the conclusion of last year's meeting. Since then, on 30 September 2023, Roger Davis retired from the board after 11 years of service, including as chairman of the Remuneration Committee. Roger joined Argo's board in 2012, bringing experience as a director of numerous ASX-listed companies and a strong background in financial services, including roles in executive banking and investment banking, and as chairman of the Bank of Queensland. As an active member of the board and applying his skills and insights, Roger helped guide Argo through the various market cycles and events, including the global pandemic. On behalf of the board, I'd like to thank Roger for his diligent contribution to Argo Investments. Following these retirements, 2 new directors have been appointed. Peter Warne was appointed as an independent non-executive director with effect from 1 November 2022. Peter is an experienced company director and has extensive knowledge in the financial services and investment banking sectors. His executive career included senior positions at Bankers Trust Australia, and amongst his director roles, he was the chairman of Macquarie Group. Melissa Holzberger was appointed as an independent non-executive director with effect from 1 October 2023. She is a commercial energy and resources lawyer with considerable experience in the international energy and resources sector. Melissa is an experienced director serving on various ASX-listed company boards and has previously had a number of other board positions on public, government and non-profit boards. I'm pleased to formally introduce Peter and Melissa to shareholders today. They're standing for election to the board and you'll hear from them each later in the meeting. We recently conducted an online survey of our shareholders. The purpose was to understand our shareholders and how we can improve our communications and engagement with them. We'd like to share the key findings of the survey with you today. Almost 2/3 of our respondents had been Argo shareholders for 10 years or more. 1/3 have been shareholders for 20 years or more. Diversified exposure to the Australian share market is the most important reason why shareholders hold Argo shares, followed by fully franked dividends. 95% of shareholders are happy with the current quantity of information provided, And emails are by far the most popular form of communication, with 80% of shareholders nominating emails as their preferred method of accessing information about the company. 80% of respondents rated our shareholder engagement as excellent or very good, and importantly, 97% of our shareholders would recommend Argo to other investors. Thank you to all those who completed the survey. We're pleased with the level of support for Argo among our shareholders. However, we do not see these results as a cause for complacency. We remain cognizant that Argo is owned by and managed for the benefit of our shareholders, and will continue to work hard to serve your interests. We welcome feedback at any time, and if you have any suggestions for Argo, then please be in touch. Contact details will be provided at the end of today's session. Australia's economy continues to be shaped largely by macroeconomic influences, most notably persistent high inflation. Like many central banks around the world, the Reserve Bank of Australia has aggressively raised interest rates in an effort to dampen demand and control price rises. To the surprise of many, Australia's economy remains remarkably resilient, as evidenced by robust employment figures and rising house prices. An economic soft landing does seem possible as the RBA navigates the narrow path of lowering inflation while not tipping the economy into recession. However, the overall state of the economy belies the growing financial pressures on many people due to sharp interest rate increases and the growing cost of everyday expenses. In turn, this is weighing heavily on consumer sentiment and spending. Although investor sentiment is indicating that the Australian and global economy should be able to avoid recession, there are risks to the outlook. It goes without saying that geopolitical tensions and risks are particularly heightened at present. As a result, growth may be subdued in the near to medium term, and further share market volatility is likely. Against this backdrop, I want to remind and reassure shareholders that for more than 3/4 of a century, Argo has navigated through the varying conditions and different market cycles and disruptive events. We've done this through being disciplined and consistently applying our conservative long-term investment approach. Argo has no debt, has cash on hand, and has a portfolio of quality stocks, ensuring that we are well positioned in the current environment. I'd like to conclude my formal remarks today by thanking our Managing Director, Jason Beddow, and the Argo team for all their ongoing hard work. I'd also like to thank my fellow board members for their valuable contributions over the past year. And finally, on behalf of the board, I welcome our loyal shareholders, and to any new shareholders, welcome to Argo. I'll now call upon Jason Beddow to present his Managing Director's address. Thank you.
Thank you, Russell. Welcome again. I've just got a few summary comments that sort of, I guess, reinforce what the chairman's just said, and then a bit of an outlook through some other items. But it was only a short time ago the prospect of a global recession seemed very likely. Most economists around the world were predicting the US to fall into recession this year, as central banks aggressively raised interest rates to control rampant inflation. However, the indicators are increasingly now pointing to an economic soft landing. So far, economies are successfully navigating the narrow path of lowering inflation through tightening monetary policy without causing a recession. In the US, the Federal Reserve has raised rates more quickly than at any time since the 1980s. Australia has also followed suit with 12 rate rises in quick succession, totalling 4%, and the official cash rate is now 4.1%. And while further increases are possible, we do believe we are near the top for interest rates in the current cycle. And like many of our other developed economies, Australia has been very resilient and has been largely underpinned by fiscal stimulus, government spending, and historically low unemployment. In addition, there's a large cohort of Australians that are benefiting from higher deposit rates, saving levels, and also asset prices. So over the financial year to June 30, Australia's share market defied most of these expectations and performed quite strongly. All industry sectors generated positive returns, although technology was the standout performer, surging more than 30%. Companies leveraged to lithium and other battery minerals also generated particularly strong returns. Meanwhile, sectors with more defensive attributes, such as utilities and healthcare, lagged the broader market. But following this strong performance, Australian investors seem less certain as we've entered the new financial year. So for the first 3 months to 30 September 2023, the S&P ASX 200 accumulation index has fallen about 1%. Energy has been the best performing sector for the quarter, up 11.2%, versus healthcare, which continues to be weak, down 8.6%, and consumer staples, minus 5.9%. It seems quite a while now, I guess going back almost to COVID, that we've been calling the investment environment uncertain. Reflecting these conditions, companies provided little forward guidance during the recent August reporting season, and I'll elaborate on some of the key points from company results a little later. And we continue to see this uncertainty playing out in the underperformance of many smaller capitalised companies, as they're more likely impacted by higher costs, less scale, and a slowing consumer. So Argo diversifies its portfolio to maintain balanced performance over longer timeframes and delivers shareholders a relatively smooth dividend profile through the different market cycles. So our recent transactions have really been adding to existing holdings and reducing the overall number of holdings in the portfolio, although we have recently added one new stock, ResMed, which I'll discuss shortly. So we've recently exited 2 takeover targets, Liontown Resources at the Albemarle bid price of $3 per share, and Estia Health following the final dividend payment which exhausted their franking credit balance. And in addition, we've exited our holding in Insurance Australia Group and sold down positions in Helia Group and Diversified United Investment. And proceeds from these sales have largely been redeployed into several stocks, including CSL, which we continue to believe is an excellent quality company. CSL is now trading at more attractive levels than previously at a time when it's returning to double-digit profit growth. We also increased our holding in Viva Energy following major shareholder Vitol's sell down of 16% of the company, and we think Viva's prospects remain strong. There's currently an ACCC ruling on its proposed purchase of the South Australian-based On The Run chain. I see there's one just across the road, actually, of petrol stations and convenience stores. We also recently participated in a $750 million equity raising by APA Group to partly fund its acquisition of Alinta's Pilbara assets. Now, this included a portfolio of conventional and renewable assets, including a development pipeline of wind, solar and battery generation. Just a few comments about ResMed and I guess why now for us. ResMed has long been and is the world leader in continuous positive airway pressure, or CPAP therapy. It's the recommended treatment for most patients with obstructive sleep apnea, or OSA. So obstructive sleep apnea is a sleep-related breathing disorder causing complete or partial obstruction of a person's airflow. The brain senses this impaired breathing and causes the individual to subconsciously rouse from sleep to reopen the airway. ResMed manufactures and distributes these CPAP machines And these are ventilators which deliver a continuous stream of pressurised air through a mask while the patient sleeps. Because obesity is a leading cause of sleep apnea, the recent hype around these GLP-1 drugs, or weight loss drugs as they're being called, and speculation that they're a cure-all for addressing obesity has led investors around the world actually to conclude that these medications will cannibalise or displace CPAP devices as a first-line therapy for OSA. This is reflected in ResMed's share price, which is down more than 30% since June 30. In our view, the positive impacts of these weight loss drugs are overstated. We've listened to dozens of calls from medical experts, both positive and sceptics on the drugs, and to be fair, the full impacts will not be known for many years. But factoring in some possible negative impacts on ResMed's sales, if obesity does decline globally, we still believe at these share price levels it represents a good buying opportunity. So we're happy to have it as a new name in the portfolio. Prior to COVID-19, a large percentage of listed companies provided guidance on forward earnings, the expectations of what they would earn over the coming 12 months or 6 months. Currently, very few companies give guidance. More commonly, they give trading updates at AGMs or investor days. And considering this, I wanted to give our insights from the most recent reporting season, which was through August into early September. Overall, the profit results, defied gloomy expectations, given headwinds from the slowing economy with rising costs, especially labour, insurance and interest costs. Revenues did show strength, though this often came from price increases rather than volume expansion. Declines in other input costs, such as commodity prices and freight costs, also helped to ease margin pressures. So companies generally provided conservative guidance, if at all, and this often disappointed the market and saw consensus earnings downgrades for companies. So for the broader market, the consensus earnings expectations were revised down by 2.4% during the month and now sit at minus 6.6% for the 2004 financial year. On the back of this, or in line with this, Australian equities were soft in August and September, and that's continued into October, as lacklustre outlooks from companies have weighed on investors' minds. Interestingly, August was one of the most volatile earnings seasons in the past 15 years, with 1 in 8 stocks moving more than 10% up or down on the day of their result. The escalating cost of debt, we believe, is emerging as an issue, with higher interest payments a growing challenge for companies with stretched balance sheets or large refinancing costs. We believe this issue is being underestimated and could result in further earnings downgrades over the next couple of years as companies need to refinance cheaper debt. Overall, the August dividends were slightly disappointing, particularly from the large diversified miners, though not unexpected with lower commodity prices and higher capital expenditure. On average, the payout ratios are still below the pre-pandemic average, and we see a risk that the payouts actually edge lower as companies brace against a tougher economy, service higher interest costs, and potentially deleverage or pay off the debt on their balance sheets. Turning now to commentary from some of the bigger companies during reporting season. The Commonwealth Bank of Australia result was solid. Despite net interest margin and cost pressures, bad debts remain low in the banking sector, but have started to creep up a little in the non-bank lenders. There was evidence that competitive pressures may be easing, and while there was an air of caution, there was certainly no major concerns in the outlook comments from CBA. Wesfarmers, they indicated they were seeing no signs of weakness in their Bunnings or Kmart businesses. Woolworths noted that demand remains solid, although there are signs of customers switching to cheaper items on the shelf. The fuel retailers, Viva Energy and Ampol, reported seeing strong commercial demand for fuel, and even Domino's was noting signs of life in demand for pizza. Resource companies disappointed, with operating cost pressures coming through and labour availability remaining a key challenge. And we're also seeing this with further delays in project execution. There was over $5 billion in impairments due to cost overruns across the industry, including Rio's Australian aluminium assets, South32, Alumina and Fortescue's iron ore business. One part of the market that did do well was the global cyclicals. Now, they benefited from the weak Australian dollar, and this group of stocks was the only category that reported positive profit surprises in the June half. Also had the lowest share of negative revisions for financial year 2024 earnings. A combination of the higher quality, generally, of these global cyclicals and the translation benefit of the lower Australian dollar. Healthcare, again, had a mixed reporting season as the sector continues to deal with cost pressures, labour challenges and weaker utilisation of their services as the world, I guess, normalises still out of COVID. Some companies in the sector, such as Ramsay, are relatively highly geared and saw a significant increase in their interest costs. The real estate trusts had a decent reporting season. However, rising interest rates and the expiration of their interest rate hedges meant earnings declined for many of the Australian REITs. All in all, though, we think Australia's economy is faring relatively well in comparison to most other countries. However, as we look forward to next year, interest rates will have a slowing impact on the economy. It appears the first half of 2024 will be particularly weak, with economists expecting the global economy to eke out GDP growth of just 1.7%. This compares to this year's predicted growth of 2.3%. Geopolitical risks remain elevated and are increasing. As we approach the 2-year anniversary of Russia's invasion of Ukraine, there are a few signs there will be a resolution to this conflict, and more recently, a significant increase in hostilities in the Middle East has added to the geopolitical tensions around the world. The current investor sentiment indicates that Australia and the global economies should be able to avoid recession. However, in our view, further share market volatility is likely, and evidence of the economy slowing will emerge, leading to pressure on earnings. Australia retains very high population growth driven by immigration, and this should be a major economic tailwind for Australia in the coming years. However, on a per capita basis, the growth doesn't look so as impressive, which highlights the lack of productivity in the economy and the challenges with migration exacerbating the housing shortage issue. And residential availability and affordability are now key areas of community concern, and that's across the country. Look, we have no debt, we have cash available, and we have a diversified portfolio. So, we believe we're well positioned to navigate these, again, uncertain times, applying our conservative long-term investment approach. So I'd like to acknowledge and thank the whole Argo team again this year, few in number. Our staff continue to be fully committed to the success of the company across both our Adelaide and Sydney offices, and I think I counted 11 of the 16 staff are in the room today, so make sure you chat with them later. Also like to acknowledge the contribution from the chairman and the non-executive directors. I welcome the new directors to Argo, and I look forward to working with them as we best navigate Argo through this next period for you. And I'd also like to personally thank Roger Davis for his contribution to the company. And finally, I wish all our shareholders well for the remainder of the year. We look forward to seeing you in 2024. We thank you for your continued support, and I look forward to continuing the conversation then. So thank you very much.
Well, thank you very much, Jason. Julian McCarthy, the signing audit partner from PricewaterhouseCoopers, the company's external auditor, is present and available to answer any questions relevant to the conduct of the audit and the preparation and content of the auditor's report for the year ended for the year ended 30 June 2023. Julian, welcome, and he's, as I say, available to answer any questions in relation to the conduct of the audit report and the preparation and content of that report. Shortly, I'll address any shareholder questions. on the financial reports and any general matters, bearing in mind that we will separately consider the remuneration report and other items of AGM business later in the meeting, at which time there will be opportunities to ask questions in relation to those items. In addition, we have received some questions in advance of the meeting which I will also answer. To ask a question, please ensure you have your green or pink card and make your way to the microphones that are located in the middle aisle so that all shareholders can hear you. Please state your name and any affiliation when you're invited to speak, and limit yourself to one question only in consideration of other shareholders. Are there any general questions about the company or its financial reports at this time? Yes, in the middle, please.
Good morning. My name is Greg O'Connell and I represent approximately 4.2 million proxy shares on behalf of the Australian Shareholder Association. To minimise my time at the microphone, I have some overall comments at this point of the program. First, thank you, Chair, for meeting with the ASA and discussing issues of interest earlier this month. Secondly, it is pleasing to note the board renewal undertaken by Argo in the last year, with the retirement of several long-serving directors with tenures exceeding Argo's own limit of 9 years and the appointment of new directors. Third, I mentioned ASA's preference for board skill needs and director skills to be presented in a matrix form to make shareholder analysis and voting for director elections and re-elections easy and effective. We encourage Argo to adopt this format for skills information. Last, in terms of voting, I will speak to the REM report when that resolution comes up. I highlight ASA plans to vote against that resolution. ASA plans to vote for all the other resolutions, although we do have questions and comments for some as they're presented. Thank you.
Thank you. Any further questions? Yes.
Bronwyn Mewat, I have a general question. My question is about our holding in Woodside. I believe our holding in Woodside is about 1.8%. I am concerned about that because of the Scarborough project, which will emit 15 times a coal station's emissions per year. And my suggestion to the board is that we divest these shares and not be involved.
Thank you very much. I think we've also received a number of questions in advance of the meeting concerning ESG issues. One of them comes from Michael Menso, who asks, when will Argo become an ethical investor and divest itself of fossil fuel stocks? Let me say in response to the question from the floor and to the one we received, that we take ESG issues extremely seriously. They are really important. And our approach is to weave ESG considerations into the consideration and investment decisions on each individual stock. Our ESG investment approach is set out on the website if you want to read more about how we go about it. We do believe that these issues can have and will have impacts on the long-term value of companies in the portfolio or potential investments that we are considering making. We do not, however, have any upfront filter that for what I might say more policy or moral reasons to exclude them from the portfolio. We do assess every stock on its merits and weave ESG considerations into those decisions. We set out clearly our investment approach so that our shareholders or potential shareholders know what we do and can make their own decisions accordingly. Yes, thank you. In the middle.
Hi, my name's Peter Croft. my brother and I represent powers of attorney for my mother, Beryl Croft, who's 98, about to turn 99, and she's had her shares for a very long time. I submitted these questions in advance, 6th of December. What percentage of the companies in which Argo invests have committed to reach a 43% reduction in greenhouse gas emissions by 2030? As you know, it's a legislated overall target. And how will Argo ensure that its share value is maintained as the energy transition to net zero takes place over the next few years?
Well, thank you very much, Peter. And as you say, we received two questions, those two questions in advance from behalf of the shareholder, Beryl Croft. I'm going to ask Jason if he wouldn't mind to address those more detailed questions about the portfolio. But before I hand to him, let me just re-emphasise to you that we believe that these issues will impact long-term value of companies, and that's very much in the investment process that we undertake. Jason?
Yeah, thanks, Russell. As you can tell, I guess, from the questions from the floor and what's been emailed in, that this is a huge issue for a lot of the community, a lot of people. It's a very challenging time as an investor in the, I guess, to try and take the public view, the reality, the commerciality, performance and profitability we need to provide to 95,000 shareholders as well. So in the instance of a Woodside, which is a gas producer, all public companies will have to report on their emissions and what they're doing about it within, I think it will begin in, say, 2025. Scope 1, Scope 2, Scope 3, and there'll be a lot more publicly available information for us as investors and the public to ascertain what these companies are doing. To meet targets that governments are aspiring to is going to be very challenging. Not aspirational, and they shouldn't be gone for, but they're very challenging in the current environment of just getting materials. So I guess when we look at the commercial reality of which companies are going to make money and income and generate and pay us dividends over the interim period, we need to balance, I guess, the aspirational side of what the world and where the world wants to get to and the commercial reality. The number of companies as a percentage is not high. It's largely the heavy emitters that have committed to reducing targets. And some of the best examples are our big miners. They're spending billions of dollars. Andy, who's in the front, he just spent a week in the Pilbara, and it's extraordinary the lengths they are going to lower their carbon footprint and progress things over the next decades. But equally, these are big emitters, and we still think they're going to generate good income and pay good dividends. A lot of technology and service companies, these sort of companies haven't put targets out. I guess they're low emitters, and they figure they can come to the party later. But look, it's a really challenging balancing act at the moment. Also, government is subsidising a lot of these industries in their infancy, and they don't really have a lot of commercial viability yet. So as an investor, if we were to take a large percentage of our fund from a Woodside, for example, and put it into some of these other businesses, we may suffer share price performance and certainly suffer from an income perspective. So we spend an extraordinary amount of time with the board because we will also have to report on our reporting and what we think. And then as an investment team, the likely impacts on earnings, share de-rating, and these type of things. But it's a challenging time. And I guess what these geopolitical issues have highlighted is there are other things going on in the world as well, which are sort of counter to some of the aspirations of others.
Thanks, Jason. In the middle.
Yes, good morning, Russell. My name is Colin O'Donnell. I have a general question that concerns me very much, and that is the chronic erosion of the net tangible assets of Argo as well as virtually all other listed investment companies that I have seen. And the latest chart from Morningstar shows it in great detail, and I'm sure you're probably well aware of it. Can you just tell me, please, in layman's terms, what's happening and what is the future we're looking forward to? For example, is Argo, like Jeff Wilson at Wilson Asset Management, going to consider converting to an open-ended fund, or are we going to remain closed-ended? I'd be very grateful to hear your comments, please.
Yes, thank you very much, Colin. A couple of elements of that. I'll address a couple and then I'm going to hand to Jason to talk a little bit about the portfolio investment performance. I might also advise, there's another question that has come in from a shareholder that is related here, which Equus SA Proprietary Limited said that Argo is consistently underperforming the ASX benchmark. What steps are you taking to address this underperformance? So I'll wrap the answer up in that as well. Well, firstly, we do intend to remain a closed-end fund. As you've noted, the relationship between the share price and the net tangible asset backing has changed over the last 6 months. While we were trading at a premium, it's now moved to a discount, and this is in line with something that's happened over pretty well all of the listed investment company world. And I believe that there's a few factors in play there, but just note that 6 months has coincided with a period of rapid rise in interest rates when term deposits became a viable income investment again, when they haven't been for some years with zero interest rates. So I think there's probably an element of some investment shifting asset classes in response to that. There's always cyclical impacts on our portfolio and the relationship between our share price and net tangible asset backing. That really revolves around investor sentiment of what's being chased by investors, and therefore share prices rising. And we've just gone through a period of some technology stocks, anything to do with AI. I mean, Jason can speak with this, but it's kind of run ahead. They don't. They're not really attractive investments for us because they don't pay any dividends. Many of them don't even make any profit. But nevertheless, they're running hard. So I think when you're comparing the index with a conservative portfolio of diversified industrial companies that we have, that's why there's been this underperformance, and as you've noted, it's across the sector. This has happened in the past, and we believe that while we're very vigilant and watching investment trends, and obviously with our investment team looking at value all the time, we feel that there's a few factors that are just running against us at the moment, but they're not permanent. And we believe that the approach that we've had that has stood us in good stead for 77 years is still valid today, and we intend to follow it. Jason?
Yeah, I guess there's probably two parts of that for me. So that the NTA, will largely reflect the equity markets. We're largely fully invested in equity markets. If they rise and fall, so will the value of our portfolio. We are trying to perform better than the market over time, but equally we want to and need to deliver a fully franked dividend, which the index doesn't. We want to maintain our LIC capital gains status so we can pass on the tax to shareholders as well. So I think the markets themselves are not too bad. I think the second part is probably more resonating at the moment, that during COVID, when interest rates were 0.1, there was a term going around the market called TINA. There is no alternative. And so if you wanted income as an investor, term deposits were almost zero, you bought equities. So we had 15,000 new shareholders over 3 years, which is far, far above average, and it pushed our premium to double digits. So the share price went to 12, 13% above the value of the NTA. over the last 6 to 9 months, that share price has come back to around NTA. So the share price is pretty much in line with NTA. But the biggest delta there is the share price has come back to, I guess, the value of the company as interest rates have gone up and people have probably looked at their portfolio and thought they have a little bit too much equities, or they're concerned about what's happening geopolitically. But getting 4.5% to 5% on cash now is a viable alternative for those looking for income.
Thank you, gentlemen.
Thank you very much, Peter. Any further questions? I have a couple here while you're thinking. There's one from Damien McGovern and Susan Raphael, which goes back to the previous issues around ESG. Has the board addressed the consequences for each of its shareholdings of net zero 2050, which is a legislated target? Might there be share divestments as an outcome? Well, as we've explained, yes, we do look at every one of our shareholdings with that lens, along with the other elements of our investment process. And one would expect that over time there will be changes in our economy, in our energy sector, and in other aspects of our economy. And as a result, our investment process will assess what changes are needed in response to that. Any other questions? I've got a couple of others here I might keep going with. Graham Thomas asks, what is the impact of the rise of AI and what impact is it going to have on Argo's investment strategies? Jason?
Good question, Russ.
Hot topic of the moment.
Very hot topic. Look, it certainly will have an impact on businesses. I guess there's twofold. As to directly invest in AI for us is as a domestic investor really doesn't exist. There may be a few little tiny small caps that are touting themselves as AI companies. The impact of AI on businesses, though, over time, you would think would be material. Anything that's repetitive, that's system driven, that AI can easily do, you would think over time will increase. What this does, I guess, to workforces and other things, still a bit unknown. Equally, legislation will have to keep up with what is allowed under AI. It's a fascinating topic. I'm an engineer, and so I'm sort of looking beyond just the AI. I'm sort of interested when they can put the AI into a robot and can actually really do things. Yep. So again, a fascinating space. Companies are talking about it, some of the bigger Australian companies, but at this stage, I think the impact really is in its infancy.
Thanks, Jason. I've got another one for you on a specific stock. Comes from Lindsay Campbell. The annual report lists a new investment in Allchem. Can Argo's philosophy of investing in dividend-paying companies, given Argo's philosophy of investing in dividend-paying companies, why is Argo investing in this stock, which does not seem to pay dividends, but hopefully capital growth? Furthermore, the share price of the whole lithium sector is declining, perhaps to a more sustainable base.
Well, I guess in probably two parts there. We do have investments that don't pay dividends. I mean, generally, as a portfolio, we expect the portfolio to deliver a certain amount of dividends, but there are some stocks that we think are either high growth or are relatively new or may become dividend payers in time that we'll have in the portfolio. Not a huge percentage, but we might carry up to 5% of companies that do that. Or there are others like, say, James Hardie. We think it's still a good company. Clearly, it's a cyclical company. And you can have your own view of the housing market, but it used to be a dividend payer. Currently, it's doing buybacks instead of dividends. Lithium, we've talked about lithium publicly. We sort of see one tangible thing we can invest in if we believe the EV story is lithium. To be fair, we've been fairly cautious on when we've bought lithium, though. We certainly weren't buying lithium in the big run-up when the share prices have nearly doubled, and they are coming back to maybe more realistic levels.
Thanks, Jason. Yes, in the middle there.
Brian Gere, I come from Port Pirie. Is there any idea about investing in NiStar? Last war, we made a hell of a lot of bullets and made a lot of money. And the way things are going, they might need bullets again shortly.
Jason?
We haven't currently looked at NiStar though, no. But maybe we should.
Yeah.
I'll get an analyst onto it. Thank you.
Thanks, Brian. Any further questions? I've got one more here. If there are no further, all right, this will be the last one. It comes from Norgal Proprietary Limited. I would like to ensure that the board does not support donating shareholder funds to political crusades. I object to a lot of the major banks and mining companies supporting the Voice. Well, let me give a brief answer to this one. We do not make donations to political parties or political crusades. It's not something that we've done. We do make a few very small donations to charities that are trying to help the lives of people who are underserved in our community, but we certainly do not donate any shareholder funds to political parties. Last chance for any further questions on this item. Yes, there's one more coming.
My name's Colin Pilcher. I've been a shareholder in Argo for about 50 years, or just over 50 years. Anyway, what I'm on about is this cyclical thing of the share market, and things go up and they go down, and Argo hasn't been performing fantastically, but nobody else has either, in my opinion. And what I encourage the board to do is stick to your knitting. If you stick to your knitting, eventually things will turn and they'll turn out well. So says my 50 years on with Argo.
Well, Colin, thank you very much for your 50 years of shareholding and sharing your experience with us. Well, as we've said, we intend to keep our disciplined investment approach, but the world is changing, and we need to be sure that we're following the trends as part of our disciplined approach, and that's what we intend to do. So, thank you. If there's no further questions, I propose to move on to item 2 on the agenda. Item 2 on the agenda concerns the adoption of the remuneration report. The Corporations Act requires that all listed companies submit a remuneration report to their shareholders for consideration and adoption by way of a non-binding resolution. Argo's remuneration report is detailed within the annual report and outlines the company's remuneration policy and its relationship with company performance. The key principles of Argo's remuneration strategy are to align remuneration structure with shareholder interests, to link a significant component of remuneration with creation of shareholder value through relative outperformance, and to ensure remuneration is competitive and fair and attracts, retains and rewards talent. Ensuring that our remuneration structure is linked to value creation for shareholders is achieved by awarding the Managing Director and specified executives with a combination of fixed and short-term incentive and long-term incentive. Fixed remuneration as well as short-term incentive, STI, or long-term incentive opportunities. Alignment of the long-term interests of shareholders and executives is achieved by a significant component of executive pay being performance-based or at risk and measured over an extended period, and also by awarding some of the executives' remuneration in the form of Argo shares rather than cash. All our employees are Argo shareholders. Performance is measured relative to Argo's listed investment company peer group and to the S&P ASX 200 share market index. During the year, we added total shareholder return, or TSR, that element to long-term incentive remuneration, which is only awarded if the company's share price return exceeds the ASX 200 accumulation index return over a rolling 10-year period. This will be tested for the first time in 2026. The company's remuneration structure is explained in detail in the remuneration report within the annual report. The board considers that it is fair, competitive and aligns with Argo's corporate objectives and the interests of shareholders, and genuinely rewards sustained good performance achieved without taking undue risks. I now move the motion that the remuneration report for the year ended 30 June 2023 be adopted. Can I ask that any shareholder who wishes to ask a question regarding the remuneration report specifically make their way to the microphone? For your information, details of the proxy votes received on this resolution appear on the screen. Please note that this resolution is advisory only and does not bind the directors of the company. However, should 25% or more of shareholders vote against the remuneration report for 2 years in a row, then shareholders at the second AGM will be asked to vote on whether all directors should stand for re-election. Are there any questions regarding the remuneration report? Yes, please, in the middle.
Greg O'Connell from the Australian Shareholders Association. Looking back in time, Argo's remuneration arrangements last changed on 30 June 2020 when Argo changed the total portfolio return performance-based long-term incentive remuneration to 40% initial vesting, up from 25%, should TPR match the Standard & Poor's ASX 200 accumulation index over the performance period, and straight line vesting to plus 100 basis points outperformance, previously outperformed by 30%. ASA viewed this as, quote, increased remuneration for lesser performance, end quote, and has voted against the remuneration report in 2020, 2021 and 2022. This year's annual report identifies several remuneration changes which we've had the opportunity to analyse and to discuss with the Chair. We understand the changes to percentages for fixed annual remuneration on both the short-term incentives and long-term incentives are fine-tuning of the changes originally made in FY 2020. As such, these do not raise concerns with us. An additional LTI Tranche 3 is implemented. As previously described, this uses the long-term total shareholder return as a performance hurdle, aligning executives and shareholder returns. The starting hurdle is high, and our analysis suggests this will be a tough hurdle for some years. This change does not raise concerns with us. As part of the changes, we understand Argo has conducted independent research to assess remuneration outcomes against peers in the market, and have concluded that Argo is in line with other companies. Given our concerns from FY 2020, we thought it important to conduct a market peer comparison to form our analysis. We compared remuneration received by Argo MD against remuneration received by the CEO of the combined LEC group of Australian Foundation Investment Company, plus Mirrabooka, plus AMCIL, plus Djerriwarrh. We note the Argo MD's salary over the last 4 years is comparable and very slightly greater than the average for the managing director of that AFI plus Mirrabooka, AMCIL, Djerriwarrh group. While Argo are paying slightly more, the comparison peer, comprising 4 LICs, is more complex than Argo and has assets under management around 55% larger than Argo. It is an old-style LIC comparable to Argo in many respects, while being larger and more complex. On this basis, our comparisons suggest to us that Argo's REM is not confirmed as being in line with the market. Our concern raised in FY 2020 over the change to the TPR component remains current, and ASA plans to vote against the adoption of the REM report.
Thank you, Mr O'Connell. I take it that's your comment rather than a question. Let me respond. I'm disappointed that the ASA has chosen to vote against the remuneration report in respect of a relatively minor change made to one element of executives' LTI made 4 years ago. This is only one element of 6 parts of our remuneration structure. And we have not changed the hurdle for awarding LTI. Rather, the award for meeting the benchmark, the S&P ASX 200 accumulation index, was increased from 25 to 40% vesting of total opportunity, and the rate of reward for outperformance was also amended. I thank you for sending your report to members of the ASA to us, which you sent on Friday afternoon. Unfortunately, that was not in time for us to help correct any of the errors that are in your report. And I'd just like to read out to shareholders the disclaimer that you have in your report, which I assume is standard for all ASA documents. It says, to the fullest extent permitted by law, neither ASA nor any of its officers, directors, employees, contractors, agents or related bodies corporate makes any representations, warranties or guarantees, express or implied, as to the accuracy, reliability, completeness or fitness for purpose of any statements or information contained in this document. Let me repeat. We have not changed the hurdle for awarding LTI, and nor do we pay for lesser performance. We pay for superior performance. A recent study published by First Links using S&P Dow Jones indices and Morningstar data showed that over 5 years, 80% of Australian equity managers underperformed their benchmark. This means that a manager who meets or beats their benchmark is in the top 20% of performers. We think that meeting or beating the index over 4 years, I should just note, after covering all of the company's costs over those 4 years and producing a reliable, fully franked dividend stream, is good performance. And I think most of our shareholders do too. We think that deserves reward. We also, last year in 2022, commissioned an expert remuneration company to review our remuneration plan, to provide an independent assessment of our remuneration plan. And they concluded that our remuneration was competitive and fair. They also found that our LTI opportunities and vesting outcomes over the life of the plan had been below the industry mean. The change to LTI was made 4 years ago and has been voted upon by shareholders every year since. Today will mark the 4th time. It has been supported by an overwhelming majority of our shareholders for 4 years in a row. I think it's time for us to move on. Are there any other questions? I now put the resolution to the meeting. I remind you that we are voting by poll, and if applicable, please mark your green voting card for item number 2. Thank you. We'll now move to the next item of business. As agenda item number 3 concerns my own re-election, I will ask Leanne Buck, who is Chair of the Board's Audit and Risk Committee, to chair the meeting for this item of business.
Thank you, Russell. Mr. Russell Higgins, AO, retires by rotation in accordance with the company's constitution and being eligible offers himself for re-election today. The details of Russell's qualifications and experience are set out in the notice of meeting. I would like to point out that Russell's tenure as non-executive director is longer than the company's general practice of 9 years. The board met without Russell to consider his re-election endorsement. It was agreed that it is in the best interest of the company that he continue as non-executive director and as chair, if re-elected today. The directors consider it beneficial to the company that he sees through the board's succession planning changes of recent years. The other directors unanimously recommend that shareholders vote in favor of Russell's re-election, as we consider that he continues to be well qualified to act as independent non-executive director and chair of the company. I now invite Russell to address the meeting.
Thank you. I regard it as a privilege to serve as chairman of the board of directors of Argo Investments Limited, and I'm seeking your support for re-election to the board of directors today. For 77 years, Argo Investments has pursued a clear strategy of prudent investment in a diversified portfolio of quality shares to produce a balance of long-term capital appreciation and an attractive, regular income from fully franked dividends for you, the shareholders of Argo Investments. Argo's success has been the result of teamwork by the management and the board. The portfolio is managed by a small but talented executive team led by the managing director, with guidance, governance and strategy provided by the board. I bring a broad range of skills and experiences to the Argo board, gained from 30 years as a director of listed companies, private companies, government business enterprises and international organisations, and from an executive career, including as a CEO in the Australian government and at the OECD in Paris. My executive career was in the area of economic and fiscal policy, government business enterprise performance and reform, science and innovation, and resources and energy. My publicly listed directorships have included companies in a wide variety of sectors, including energy, infrastructure, construction, food and food services, investment, and telecommunications and technology. As a result, I bring a rich experience set and a broad perspective to the work of Argo. In a sporting context, I've no doubt you've heard of the saying that a champion team will beat a team of champions. Well, the same is true in business. Teams are stronger than individuals. All my career, I have worked to build teams and to encourage and enable people to contribute their best and to value that contribution. This is the approach I bring to the chair of Argo Investments, with a view of getting the best from our small but talented team. I've used that approach to steer Argo Investments through the challenges arising from the economic and policy extremes prompted by the global pandemic and its aftermath. With your support today, I look forward to drawing upon my broad knowledge, experience and skill to work with my fellow directors and management in pursuing the objective of sustained, successful performance of Argo Investments Limited. Thank you.
Thank you, Russell. I now move the motion that Russell Allen Higgins be re-elected as a director of the company. May I ask that any shareholders who wish to ask a question regarding this resolution, please make their way to the microphone. For your information, details of the proxy votes received on this resolution appear on the screen. A simple majority of greater than 50% in favour is required to pass the resolution. Are there any questions regarding Russell's re-election? I also note that we have not received any questions prior to the meeting. I now put the resolution to the meeting. If applicable, please mark your green voting card for item number 3. Thank you, and I now hand back to Russell, who will move to the next item of business.
Thank you very much, Leanne. Item 4 on the agenda concerns the election of Mr. Peter Warne. Peter was appointed to the board in November 2022 as an independent non-executive director following appropriate background checks. Mr. Warne is an experienced director with extensive knowledge in the financial services and investment banking sectors. His skill set is ideally suited to the board. In accordance with the company's constitution and being eligible, Peter offers himself for election by the shareholders today. The details of Peter's qualifications and experience are included in the notice of meeting. The other directors unanimously recommend shareholders vote in favour of Peter's election as they consider he's well qualified to be a director of the company. I now invite Peter to address the meeting.
Thank you, Russell. And good morning, ladies and gentlemen. I'm pleased to offer myself for election to the Argo board. As you've seen from my brief resume in the notice of meeting and in the annual report, I initially trained as an actuary and since then have had a 45-year career in the finance and investment industries. My career covered a range of different elements of the finance industry, including institutional funds management, sales and trading in financial markets, treasury management, investment banking, retail banking, superannuation, wealth management, and corporate advisory. I have worked primarily in Australia, but have had responsibility for and overseen operations all around the world. In addition to working in the financial services industry, I've had a long history of being a non-executive director. I joined my first board in 1990, which was the Sydney Futures Exchange, and have been a member of boards ever since. I've had experience of being a director of companies large and small, listed and unlisted, parent companies and subsidiaries, for-profit and not-for-profit organisations, and government departments and agencies. I've also sat on and chaired a broad range of board committees, including audit, risk, compliance, governance, remuneration and people committees. Most of my board experience has, one way or another, been related to the finance industry. While I'm currently on the boards of a number of other companies, including one other listed company, I believe I have sufficient time to dedicate to my duties on the Argo board and to properly carry out all my responsibilities. I do not believe I have any conflicts of interest which would impair my ability to fulfil my role on the Argo board properly. Since joining the board of Argo almost 12 months ago, I've been impressed by the way the board and management approach the task of managing Argo to consistently deliver on the clearly articulated aims of conservative management, strong, reliable and growing dividends, capital growth, low-cost administration, strong communication with shareholders and providing clear and transparent information. These fundamental pillars are consistently front of mind for all management and board considerations and discussions. I believe that I have the skills and experience to make a valuable contribution to the board, and with your support, look forward to continue to work in your interests. I also look forward to having the opportunity to have a chat with you following the meeting. Thank you very much.
Well, thank you very much, Peter. I now move the motion that Peter Hastings Warren be elected as a director of the company. Can I ask that any shareholders who wish to ask a question regarding this resolution, please make their way to the microphone. For your information, details of the proxy votes received on this resolution are on the screen. A simple majority of greater than 50% in favour is required to pass this resolution. Are there any questions regarding Peter's election? If not, I shall move on. I now put the resolution to the meeting. If applicable, please mark your green voting card for item number 4. Item number 5 of the agenda concerns the election of a new director. Melissa Holzberger was appointed to the board on 1 October 2023 as an independent non-executive director, following appropriate background checks. Ms Holzberger is an experienced director and commercial and energy and resources lawyer. In accordance with the company's constitution and being eligible, Melissa offers herself for election by shareholders today. Details of Melissa's qualifications and experience are included in the notice of meeting. The other directors unanimously recommend that shareholders vote in favour of Melissa's election, as they consider she is well qualified to be a director of the company. I now ask Melissa to address the meeting.
Thank you, Chairman. Good morning, shareholders and colleagues, and thank you for the opportunity to present today about what I can bring to your company. Argo Investments has a long and proud history of over 77 years. It started here in Adelaide, South Australia. I was raised here, being 6th generation South Australian on both sides of my family. So it's a particular honour for me to have been appointed by the directors of Argo on the 1st of October of this year. And I'm looking forward to continuing with your support today. By background, I'm a commercial, energy and resources lawyer with more than 20 years' experience in both private legal practice and in-house as a lawyer with multinational and Australian energy and resource companies. I've had a particular focus on projects, operations, risk management and ESG matters. For the last 10 years, I've been an independent non-executive director on listed government and not-for-profit boards, and I've chaired various audit, risk, governance and sustainability board committees. I'm currently a non-executive director on 2 other listed mining companies, Paladin Energy and Andromeda Metals, and I'm a member of the Federal Government's Australian Radiation Protection and Nuclear Safety Agency's Advisory Board. My broad legal and non-executive director experience also encompasses areas of logistics, transport and infrastructure, technology, international trade and agribusiness sectors. The knowledge I've gained from these roles enables insight into risks and opportunities that Argo is facing in its investments. I have a blend of skills and experience that complement those of my colleagues on the board. I bring strong corporate governance, legal, risk, compliance, corporate ethics, sustainability, and ESG skills and experience to Argo. I consider it a great honour and a responsibility to be a director and steward of Argo. If elected, I'll work diligently for you, our shareholders, to advance Argo's outstanding
a record. And as an independent director and a member of the Remuneration Committee, I look forward to contributing to your company's success. Thank you.
Well, thank you very much, Melissa. I now move the motion that Melissa Kate Holzberger be elected as a director of the company. Can I ask any shareholders who wish to ask a question regarding this resolution, please make their way to the microphone. For your information, details of the proxy votes received on this resolution appear on the screen. A simple majority of greater than 50% in favour is required to pass this resolution. Are there any questions regarding Melissa's election? I now put the resolution to the meeting. If applicable, please mark your green voting card for item number 5. Item number 6 on the agenda concerns the introduction of a dividend substitution share plan. The company proposes to introduce a dividend substitution share plan, or DSSP, which will provide an alternative to the existing dividend reinvestment plan, or DRP. It will offer an optional method by which eligible shareholders may elect to receive additional Argo shares as an alternative to receiving dividends. Whilst this may be attractive for some shareholders, we do not expect that a large number of shareholders will participate in the DSSP, as participants will not get the benefit of franking credits or a reduction in relation to any LIC capital gains. Shares received under the DSSP should not be subject to Australian income tax at the time the shares are allotted, as shares are likely to be not to be deemed a dividend. The shares issued under the proposed DSSP should, however, impact the taxable gain or loss which may arise on the subsequent disposal of the additional and participating shares. To be clear, today we're just asking you to vote on whether to introduce the dividend substitution share plan as an option for shareholders to consider, and it's not a vote on whether you personally wish to enter the DSSP. Argo has received a draft class ruling from the Australian Taxation Office in respect of certain outcomes for Australian resident shareholders who hold their DSSP shares on capital account. The ATO has indicated it will issue a final class ruling if consent for the DSSP is obtained by Argo shareholders today. We have received queries about the difference between the current dividend reinvestment plan and the proposed dividend substitution share plan. Whereas under the existing DRP, participating shareholders received a fully franked dividend, which is then automatically reinvested into new Argo shares. Whereas under the proposed DSSP, participants will not receive a fully franked dividend, but instead will be issued with new shares, creating a tax timing difference. A full description of the terms and conditions of the DSSP was provided in the notice of meeting. I now move the motion that in accordance with Clause 95 of the company's constitution, a dividend substitution share plan be made available to eligible shareholders of the company. Can I ask that any shareholders who wish to ask a question regarding this resolution, please make their way to the microphone. For your information, details of the proxy votes received on this resolution appear on the screen. A simple majority of greater than 50% in favour is required to pass this resolution. Are there any questions regarding the introduction of a dividend substitution share plan.
I would like to ask a question. What is the purpose of it from Argo's point of view?
Colin, wasn't it?
Yes.
Yes, Colin, thank you for the question. We've had requests over the years from a small number of shareholders to ask us to introduce this dividend substitution share plan. We're aware that some other like companies have one. For certain individuals, there may be a tax advantage in participating in the DSSP, but as I outlined in my speech, and it's in detail in the notice of meeting, you would need to look at circumstances very carefully, and I would advise get professional advice before you went here. But there's no doubt for some individuals in particular circumstances there will be an advantage, or could be an advantage. One can't tell the future, of course, but could be an advantage. And it's in response to requests from shareholders that we've gone down the path of introducing this DSSP.
The shareholders, are they mainly corporate shareholders that are requesting, like superannuation funds, etc.?
No, not corporates. In fact, I doubt this will be attractive to corporates. There's been individuals who have been asking.
Thank you.
Okay, any further questions? A simple majority of greater than 50% in favour is required to pass this resolution. I now put the resolution to the meeting. If applicable, please mark your green voting cards for item number 6. Item number 7 on the agenda concerns the approval of proportional takeover provisions. This last item of business concerns the approval of proportional takeover provisions contained in the company's constitution. The special resolution to be considered is that, and I quote, that the proportional takeover provisions in clause 25 of the Constitution be renewed for a period of 3 years commencing on and from the day this resolution is passed. Clause 25 of the Constitution has the effect of providing that shareholders representing a majority of shares for which votes are cast at a general meeting must approve a proportional takeover offer for their shares in order for any such offer to be effective. Clause 25 applies only to proportional takeovers and has no application where an offer is made for all of a shareholder's shares. If a proportional takeover offer is received, the directors are required to convene a meeting at least 15 days before the offer is closed to consider a resolution to approve the proportional takeover offer. The offerer and persons associated with the offerer are ineligible to vote, but shareholders will be asked to approve the offer. By virtue of the Corporations Act 2001, Clause 25 ceases to apply 3 years after it was last renewed, which was on October 26, 2020. A resolution is accordingly proposed that Clause 25 of the Constitution be renewed for a further period of 3 years from the date when the resolution is passed, so as to give the majority of shareholders the right to approve or disapprove any takeover offer that is for less than 100% of their shares. The potential advantages and disadvantages for directors and shareholders if Clause 25 is renewed are outlined in detail in the notice of meeting, and I do not propose to repeat that information here. The directors consider that it's in the interests of shareholders to have the right to vote on a proportional takeover offer, and accordingly recommend that the renewal of Clause 25 be approved at this meeting. I now move that the motion that the approval be given to renew the proportional takeover provision in the company's constitution. Can I ask that any shareholders who wish to ask a question regarding this resolution make their way to the microphone now? For your information, the details of proxy votes received on this resolution appear on the screen. This is a special resolution, and as such, a majority of 75% in favour is required to pass this resolution. Are there any questions relating to the renewal of the proportional takeover provisions? I now put the resolution to the meeting. If applicable, please mark your green voting card for item number 7. That concludes the formal business of this meeting. The poll will remain open for a short time after the meeting to allow you to submit your votes as you leave. We will announce the results of the poll to the ASX later today. If there's anybody who requires assistance with filling in the voting papers, please ask one of the representatives of Argo or Boardroom. Can I remind you that the 8th Annual General Meeting of Argo Global Listed Infrastructure Limited, which is also managed by Argo personnel, will be held in this room at 12:30 today. Argo shareholders and other visitors are invited to attend. You will need to register separately for that meeting if you've not already done so. And you can do that at one of the booths in the foyer outside this room. You do not need to be an Argo Infrastructure shareholder. During the break between meetings, the directors, senior executives and other staff from both companies will be available to take any questions you may have. At that time, please feel free to wear a mask if you wish, but if you choose not to wear one, that's also fine. Please don't forget to place your voting paper in one of the ballot boxes as you leave the room. I now declare the 77th Annual General Meeting closed. And I invite you to the refreshments. Please make your way out the door and to the right to the foyer, and look forward to having the opportunity to have a chat. Thank you very much.